What's up, traders? Steven here, your honest trading coach. And if you are not or plan to be a price action trader, then this video is not going to be for you, and you can go ahead and click away. Now, I know that I probably lost a lot of people doing that, but I don't want this to be a waste of your time in any way, shape, or form. This video is going to be solely based on price action. No indicators involved whatsoever. And the strategy, system, philosophy of trading that I'm going to share with you in this video was actually created based on a dare I got a few years ago. Let me explain that in a story. So whenever I first started practicing price action trading, I actually had a partner in crime, if you will. It was a guy that I met at the University of Georgia. His name was Josh. He wore glasses. He was a straight A student. He was in school for computer science. This was a very intelligent guy. So me and him partnered up, and we both started trading price action patterns and reversal patterns, price action in general, at about the same time. About a month goes by, and I get a phone call from Josh. Josh calls me and goes, "Hey man, I just want to let you know that over the past 30 days, I've been trading price action, and I've lost 25 out of 35 trades. This shit does not work." And taking that as a challenge, because I'm extremely competitive, I took that like a challenge. I took that like a dare that he was saying there's no way I could create something based around price action that would actually create an edge and a profit over time in the markets. So setting out on this adventure over the next few weeks, I spent hundreds of hours testing thousands of trades and eventually came up with the strategy, system, and philosophy of trading that I'm going to share with you in this video. Now, Josh went on to pursue a career in computer science, doing very well now, but still trades on the side for extra income with his investment portfolios. This strategy is a strategy that he still uses to this day. This is a strategy I still use to this day, and it's one of my most accurate ways of trading. And what I want to do with this video is share with you three things. The purpose of these three things is to keep you from having to spend hundreds of hours testing thousands of trades, save you time and energy so that you can start off by testing and trading based on ways that already work, that I've personally already tested. And I'm going to do this by showing you three things in this video. The first part of the video, I'm going to show you exact rules, the objective rules that I use for these price action patterns, so you're never confused about how to trade price action and reversal patterns. Again, these three patterns that I'm going to show you are the patterns that I personally use in order to trade every single time I place trades based around price action. The second thing I'm going to do is go ahead and go through two live trades I took last week using the exact same strategies and systems, the exact same price action patterns I'm going to show you in the first part of the video. And lastly, what I'm going to do is break down the entire rules-based system and strategy to you. That way you have it in your arsenal so that you can take it, test it, figure out if you want to use it for yourself in your own personal trading plan. So if that sounds good to you, I need you to do a couple of different things for me. First off, please go ahead and smash that like button, because I'm going to come at you with some extreme value today, and I need that in order to show more price action traders this video. We got to get the word out on what actually works and what doesn't. Second, go ahead and hit that subscribe button if you're not already subscribed, so that you're alerted about the content we come out with each and every week. And third, go ahead and follow us over on Instagram at The Trading Channel to get notified about early release content. So I will see you directly after the intro and disclaimer to share with you the three main reversal patterns that I personally use in my trading each and every time I trade based on price action. Welcome back, traders. Let's go ahead and get started. And first off, what is the main problem with trying to trade reversal price action patterns? Well, remember me talking about my buddy Josh. One of his problems was that he was trading all these patterns but had no rules at all for how to trade them. So you've probably heard, let's say for a head and shoulders pattern, that you're supposed to trade after the break of a neckline, right? You're supposed to trade, we have our shoulder, our head, our shoulder, and then when that neckline's broke, place the trade. You may have also heard to place a trade on the shoulder. You may have also heard that this isn't a head and shoulders pattern because it doesn't look perfect, or is for some reason. The point is not what is and isn't a head and shoulders pattern. The point is to have consistency. And having consistency means that you have a set of rules. You see, my buddy Josh had no set of rules, and because of that, he was trading numerous patterns and losing tons of trades because he wasn't trading in a consistent way. So what we're going to do now is take a look at some consistent rules you can apply to head and shoulders pattern. Head and shoulders patterns are the first ones we're going to take a look at in this portion of the video. And what this is going to do is keep you from having to go, is this a head and shoulders pattern? Is this a head and shoulders pattern? Shoulder, head, shoulder, break. Is this an inverted head and shoulders right here? You won't have to question that any longer as long as you have a set of rules that tell you whether this is or is not a head and shoulders pattern and tells you how you're going to be trading that. So right now, let's jump into the objective rules that I personally use and that really are the only reason I was able to create profits out of price action trading with reversals. Let's go ahead and talk about those rules right now. So for our first example, let's take a look here on the Euro Pound 15-minute chart. And what we're looking at here is we have what looks to be a possible head and shoulders. We have our first shoulder here, we have our neckline creation right here, and we have the head right here. At this point is when I can start mapping out my rules for is this a head and shoulders pattern or is this not a head and shoulders pattern. My rules for this, I'm going to go really slowly here, and this is the time you might want to bring out a pad and a pen so you can keep up with this information as the video continues. So my rules, once we have this in place, we have our push up, our first shoulder, our head, and we've pushed back down. I wait to see a push back up. As soon as I see a green candle pushing back up, what I do is map out a zone. This zone is from the body of our first shoulder to the body of our head, the highest body of these candles. These candles came up to right here where you see my horizontal line. The highest bodies on our previous shoulder is right here. What this is right here for me is a termination point. So I'll put a box in this area right here. This means that I can have candles push up, and I need these candles pushing up to at least enter my termination point. Entering that termination point could be with a wick of a candle, could be with the body of the candle. That's irrelevant. So if I have a candle that pushes up like this, let's say the next candle is green or red, and it touches my termination point, that counts. Now I have a valid head and shoulders pattern until or if this comes up, another candle comes up and touches my head, then I no longer have a valid pattern. So the termination zone for my head and shoulders pattern is in my red zone right here. Let's see what happens. As we push up into this zone, what I want to see is candles touching the zone as we are right now, but not going and touching the top of the zone. So the termination point again is right here. And what I want to see in this termination point, this is how I spot head and shoulders patterns. And the way that I spot my entry is just a red candle. You see, I already have my pattern created here. This, in fact, is a head and shoulders pattern. But I want to see confirmation that this head and shoulders pattern will push the market down. And that confirmation for me is a red candle. So let's see what happens. Does this next candle stay in my termination zone? Yes, it does. It doesn't hit the top of my zone, right? So therefore I can keep looking for possible entries. And there, what happens? So now what I have is a head and shoulders pattern where, remember, these are the set in stone rules so that you never have to be confused about what a head and shoulders pattern is supposed to look like. Again, you'll now know what you're looking for every time you're looking for a head and shoulders pattern. We have our first shoulder, our head, back down, creating our neckline. And what I want to see is a market that pushes up into my termination zone between the bodies of the highest candles of the first shoulder and the bodies of the highest candles of the head and shoulders pattern. That's my termination zone. Once the market gets into that zone, I'm looking for a red candle for a possible entry. There's that entry. I will then have a stop loss that's just above the head of my head and shoulders pattern. This is breaking into the how. How am I going to trade this pattern? It's just like this. I want a risk reward of at least a 1-to-1 risk reward. Let's hit play and see what happens. The market then continues to play around in our termination zone before eventually pushing down and hitting our profit target. So this is the exact objective way that I look at head and shoulders patterns. I will go over this one more time with an inverted head and shoulders. If you need more help on this, you can go back and rewatch this portion of the video. We're going to go over it one more time when we take a look at the live trade in just a second. But essentially looking for a termination zone between the highest bodies of the first shoulder and the highest highs of the head and shoulders. That termination zone is where I want to see the market get to, and when it gets to that zone, my entry reason is looking for a red candle for confirmation that we could see this market push down from that head and shoulders pattern. So that's the first pattern I wanted to take a look at. Next up, let's take a look at the next pattern. I'll see you in just a second. Okay, so the next pattern we're taking a look at is the inverted head and shoulders, meaning the opposite of what we just looked at. So I want you to look on the screen and see if you can flip it yourself. Do you see what I'm looking at as in the inverted head and shoulders pattern here? And try to define the rules as you go as well. What we want to see is this first shoulder, and then we want to see a break of that shoulder because that gives us our head. The head has to be lower than the first shoulder on an inverted head and shoulders pattern. So we see that first shoulder, we see the neckline, the head of that pattern. At this point, try to map out the zone. What zone would we use in a inverted head and shoulders pattern in order to classify this as an actual head and shoulders? Well, I just thought of this. That's actually a shampoo brand. That's so weird. I feel like I'm just saying shampoo brands. Sponsored by I'm just playing. Okay, so we have an area now that looks like this is our termination point on an inverted head and shoulders. What we're looking at is the area between the lowest bodies of the first shoulder and the lowest bodies of the head of this head and shoulders pattern. So with that being the case, this would be our termination zone. Now, if this is our termination zone, what do we need to see happen? Well, we need this market to at least get down to that termination zone. But we do not want this market to even touch the bottom of our termination zone right here. The bottom of our red box can't even be touched, not even by a wick. If I have a candle that looks like this, comes down and touches that, I invalidate that as a head and shoulders. That looks more like we're possibly going to see trend continuation or a double bottom, but it classifies as a totally different pattern. As for a head and shoulders pattern, I need to see a termination in this zone. And what I mean by termination is I need the market to hit this zone without going below it in any way, shape, or form with a wick or a body, and then give me a green candle to show me confirmation that this head and shoulders pattern could take this market higher, could take us into a reversal considering the previous trend of the market. So let's hit the play button, see what the market does in this case. We're getting closer, not in our termination zone yet. At this point right here, we are in our termination zone. If I raise up my black line here, you can see that if we're on exactly these bodies here and we bring up the box, we actually do get into our termination zone, and the market prints a green candle right afterwards. What does this mean? Well, for the way we enter on inverted head and shoulder patterns, we would do something like this here at the trading channel. Whenever I say we is what I mean. We would do something like this. We would have a stop loss below the head of the pattern. We would have a target at least a 1-to-1 risk reward. You can base targets on structure. That would give a 2.25. Let's do that this time. Let's base our targets on the previous level of support that could turn to resistance. Just to show you the power of trading in this way. Let's hit play and see what happens here on this head and shoulders pattern. We mess around down towards our left shoulder for a second while consolidating, then push up, get closer to targets, and eventually, if I speed this process up a bit, we actually hit targets right here. So we eventually hit our targets right in that area. So that's the inverted head and shoulders. If you need to watch that again, feel free to back the video up. This is supposed to be a guide for beginners, intermediates, and advanced traders so that you have objective rules in order to define these price action reversal patterns. So feel free to back up the video and watch that one more time until it makes sense. Following this, we're going to take a look at one other pattern, and then I'm going to show you a couple of live trades I took using all of these patterns. And then I'm going to show you a full strategy, a full breakdown of when I use these patterns so you can add it into your own trading. So let's go ahead and take a look at the next pattern right now. All right, so the next pattern we're taking a look at is the double bottom. And as simple as this is going to be, and as simple as a double bottom and double top pattern are, this is one of the most accurate ways I've found to trade. This alongside with the head and shoulders and inverted head and shoulders are what I use on 90% of my price action trades. And I don't just use them by themselves. That's why you got to stick it out for the rest of the video. Take a look at the live trades and the explanation behind them, because I'm going to show you the exact system and strategy that has provided that heavy accuracy over a long period of time. But let's take a look at double bottoms, and let's take a look at the rules, the objective rules that I have for these types of trades. So right now, what you can see is a market that is downtrending, right? We're in this downtrend, we're pushing lower, and we have one bottom and a push up. This push up, by the way, I need to see 2 green candles on the push up. I have to see that. If that doesn't happen, and I just have one green candle and then another push down, such as right here, I don't even start to look for a double bottom in this case. I need at least 2 green candles pushing back up for a double bottom. Again, you may need notes in order to remember this if you're someone that's newer. Now, for a termination zone with my double bottoms, what I look for is a candle that at least touches the body of our double bottom, but does not close below the low of the first bottom. So in this case, we have the bodies of the candles right here and the low being this red candle. If a candle pushes down and closes below that low, I see this as trend continuation, and the likelihood is that this market, the heavy likelihood, the high likelihood is this market continues lower. But if I get a candle whose body comes into this zone and the wick goes below it, that's just showing me buying pressure. So I'm okay in the case of double bottoms with the wick going below the previous low, not with the body going below the previous low. That's when I invalidate it and look for trend continuation. I'm also okay if just the wick of a candle comes into this zone and the body doesn't touch it. So that's going to be the termination zone, and a wick can close below it in this case. So we have this termination zone for our double bottoms. Once we get into that termination zone, right there, we got close to closing below, right? But we didn't close below the low. So I'm still expecting possible double bottoms here. But for confirmation, very similar to what we just looked at with the head and shoulders and inverted head and shoulders for a double bottom, for confirmation, I'm looking for a green candle to tell me that this double bottom could push the market higher in this reversal. So let's see what we get here. There's a wick below it, but what do we have? We had a wick push below, showing me buying pressure because the body didn't close below, and now we have a green candle. With this being the case, this is my entry for double bottom patterns and the way I'm going to show you how to trade them in this video. This would be my entry. Let me delete that extra tool, make this smaller. Don't know why they are always so big. I guess because I'm really zoomed in. And my stop loss would go below the low of this double bottom. My target in this specific case would probably be up at the previous level of structure. So let's put it right up there and see what happens if we hit play. We got a 3-to-1 on this possible trade. That did not stop us out. If I zoom in a little bit further, right here we had a wick come about as low as the previous wick, but not close enough to our stop loss to have to worry about. Market is pushing in our favor, and eventually the market hitting that target. Now, this won't always happen. Obviously, you'll still lose trades even trading this way, and if you take every one of these trades, you will absolutely lose as a trader in general. The point of this, and the point I'm going to make after we take a look at the live trades, is to trade this type of price action, rules-based, objective strategy like the head and shoulders, inverted head and shoulders, and the double bottom pattern that I just showed you. Trade these in very specific areas that give an edge over the market with this consistent set of rules that I'm going to show you in just a second. First, before I show you that consistent set of rules, now you have head and shoulders, inverted head and shoulders, and the double bottom pattern. We're going to take a look at double tops, and that's just going to be the inverse of what you just looked at. That's another way that I trade these price action patterns in very specific zones of structure. And we're going to take a look at all of that in just a second, put it all together, combine it into a system, a rules-based strategy that you can actually take, test, trade if you find it to give an edge over the market, and go ahead and add to that trading plan if that's something you decide to do. Let's take a look at double tops though right now. Okay, so now we're taking a look at double tops, and what do you see on the screen now? What we have is a market that's pushing up, creating one top, pushing down to a possible neckline. The beauty of this specific trade is that we're pushing right up into a previous level of structure support that's likely to become resistance. So what do we have with this double top? Well, we have the highest bodies of that first top right here. We have the highest highs of that first top right here, meaning that we have a termination zone right here. What this means is that we can have candles push up and the wick of the candle hit this zone. We can have the body of the candle close in this zone. We can have a wick push above it. The only thing we cannot have is a body of a candle closing above this top wick, and the reason is because that signifies trend continuation, and we don't want to be going short if the market's likely to continue in this trend, and we are trying to trade double tops here. So let's see what happens and if we actually get a trade. If I push the market forward here, you can see that we're now entering into our termination zone. With this being the case, can I take a trade? Hopefully you answered no to that, because what could happen here is we could see a cluster of green candles that continued pushing up into an uptrend. Just because we're hitting our terminations on and I've classified this as a double top doesn't mean I have confirmation that the market's likely to fall. I have to wait on that confirmation. The way I do that is just by waiting on a red candle. So we continue, and what do we have now? Is this that confirmation? Well, yes, it is. This is telling me that this market has actually created a double top and shown selling pressure from that first top. So what I would do, grab my entry tool, place it like so on the close of that candle or the open of the next candle. They're the same exact thing. Put a stop loss just above the previous high over here, the high of my double top, and put a target somewhere near the previous level of structure. Let's hit play and see what happens. The market pushes down and immediately, or very quickly at least, hits that target on the double top. So that's the double top. You now have the rules-based way I look at these patterns. What we're going to do now is I'm going to show you the live trades I took last week using these same exact rules with a combination of structure that I'm going to teach you right after showing you those live trades. So you'll have this full system, this full strategy in your arsenal. Let's go ahead and take a look at those live trades though right now. All right, traders, so we just got an entry here on the Euro Pound. I'm going to go ahead and place my position tool and get this trade moving. I want to have a stop loss above our previous highs over here, and my target is going to be pretty far. I'm going to start off with a 1.4 though right here, and we will see how this starts to look and how this trade starts to play out in just a second. I'm going to go ahead and place the actual trade. It's going to be a new order. We're looking to sell. I know where my stop and target is, so I can tell myself what I'm going to be risking on this trade with a stop of around 10 pips. Let's do 11 for safekeeping and a target of around 14. And that, let's make it 15, is going to be our trade setup. We have to do our risk now, which I'm going to put 2% on this specific trade because I have a lot of confidence in it. So let's see how the trade plays out. Let's go ahead and click the button. And there we are, guys. Good to go on this trade. I'll keep you guys informed as it plays out. What's up, traders? We're looking at the Aussie Canada right now. I'm looking at this double bottom move we have right here. I'm gonna go ahead and open a trade live with you guys, and we're gonna take a look at how it plays out and the full analysis behind this trade momentarily. So I'll click the buy button as soon as I get my risk correct. There's gonna be a 2% risk on this trade. And there we go. We are in the trade. I will let you guys know as soon as I either get stopped out or hit targets on this trade, and I'll talk to you a little bit about the analysis that went into it. See you in a second. All right, traders, back here on the Euro Pound 15-minute chart yet again for about the third time in this video. But what we're looking at here is that Euro Pound trade you saw me take live. And what I want you to do is walk yourself through this trade. Right now, as you look at the chart, let's talk about this head and shoulders pattern, right? What are you looking for in this head and shoulders pattern? Well, we know that we have our first shoulder. We need a break of that high to have a head. So we have a push down to what will be our neckline. We have a push and a break of this shoulder to give us our head. We then have a push down and a test of the neckline, which is necessary as well. We need at least a test of this neckline. After the test of that neckline and a green candle showing us that we are, in fact, pushing back up from the neckline, right? Here's that green candle. Now, what are you looking for? Well, if you were paying attention earlier in the video and you remember back from that portion of the video, our termination zone for a head and shoulders pattern looks like this. We have the highest bodies of the left shoulder and the highest bodies of the head. And in that area is where the market can terminate. And terminate is defined as get to without going above whatsoever and give me a red candle for confirmation that we could see this market drop and have a reversal. We've been in an uptrend. I want confirmation that we could possibly fall after this head and shoulders pattern. So let's push the market forward and see what we get as we push a little bit higher here. We finally enter into our termination zone right here. So now we've entered into the termination zone between this left shoulder and the head of the pattern. We don't want the market to touch our top part of this termination zone. So what we want to see is a red candle before the market touches the top part of our termination zone. So let's hit play and see what happens. And there's our red candle. That was actually the entry you just saw me take. Our stop was exactly where it was. And my target on this specific trade, I ended up moving the target from a 1.4 to 1 risk reward down to a 2 to 1 risk reward because it had a little more structure that was supporting it there. And if I hit play, you'll see that this trade, in fact, eventually, sometimes it takes a while when you're trading, guys. Eventually, though, we did in fact, pushed down to hit the targets. Geez, that was the slowest I've ever said that. But as you can see, we had a lot of consolidation. This was one of those trades that was hard to stay in, but eventually the market did push down and hit my overall target at a 2-to-1 risk reward and a previous level of structure. Now, before we talked about this specific trade, I told you I'm going to teach you a whole system, and that trading these patterns by themselves in the middle of nowhere is not going to create a consistently profitable trading career. That's why it was important for you to stay this far into the video, was not only to learn these patterns in an objective way to find them so you can trade with consistency, but to understand that I'm not trading these patterns every time they happen just because I see a head and shoulders pattern. These patterns work best at higher time frame levels of major structure. So let me explain, that lisp got me really bad. Let me explain what that looks like out on a higher time frame. If I'm trading and my trading time frame, like for instance what we just did, is on the 15-minute chart, then I'm going to zoom out to the 4-hour chart in order to see if I have structure. So as this market was pushing up, what I was actually doing is looking left, placing my horizontal line at the previous level of major resistance for this market, and asking myself if it was tested multiple times. We have 1, 2, 3 tests of this level, so I knew if the market got to this level, I would definitely be looking for a price action pattern that could possibly push the market down. Now, if you haven't studied a little bit about structure and you don't know anything about what I'm talking about right now in terms of structure levels, I can't get into it right now in this video because this video would be hours long, right? But I do have a video I recorded last week on this exact subject, and I was doing these in sequence on purpose so that you can go to that video, which will be linked in the top right-hand corner of this screen. Go to that video, check that video out to understand how I find these specific zones in order to trade the entries I just shared with you inside of. So this specific case, and what's important for you to note now, is don't trade these patterns absolutely by themselves all the time. What you want to be doing is finding areas of value in the market, as in previous levels of major structure, and using these types of pattern in those areas. Now, don't go out and use this either. This is something you need to test. Make sure that you can find a way to make it provide an edge over the market, and then you need to decide whether or not you want to add this to your trading plan based on your testing results. This isn't something you just need to go out and start doing right now, because the testing process is something that is extremely important in trading. But that was the euro pound trade. Now let's take a look at the other trade, the double bottom trade we had. Let's look at that right now. Okay, so here we are on the Aussie Canada. We're actually on the 4-hour chart now, because I'm going to show you the entire top-down analysis that I do before placing trades using these patterns. Right now, what we're looking at is a market that's pushing down, right? As we're pushing down, I'm looking for areas the market's likely to reverse in. And if I zoom this chart out, you'll probably be able to see why I was so interested in the area in green that you see on the chart. This area had acted as resistance, support multiple times in the past, and I assumed that if the market got down to this area again, we would more than likely see a bounce out of this area. Now, my objective, easy way to capture that move up that is very likely, is by trading based on the price action patterns I've taught you in this video. For me, in this particular case, it was the double bottom pattern. So let's see what happens here on the 4-hour chart as I push the market forward. There we go. We get into our zone. So the moment we get into our zone, I'm dropping down to a 15-minute chart. After dropping down to this chart, what am I looking for? Well, I'm going to be looking for that double bottom situation. So let's push the market forward and see what happens. And actually, this was on a 1-hour chart. Sorry about that, guys. This specific trade was based on a 1-hour chart. So right now, what I want you to notice is that we have come into our green area, right? We had our area of structure based on our 4-hour chart, and the market's pushed down, created a bottom, have 1 green candle, 2 green candles up to our neckline. Then we have another push down. We have our termination point. Remember, our double bottom termination points between the bodies here and the lows there. We don't want to see a candle close below that. But then what we get is a nice green candle off of those lows, showing me this valid double bottom with confirmation being that green candle. With that being the case, I went ahead and took this trade with a stop loss right below the lows of that double bottom. I'll hit play. I had my possible targets at a 3.5 on this one because out on the 4-hour chart, this was the next major level of structure support, was right in this area here with these support levels out on a higher time frame. So that's where I place my targets. If I hit play, you'll see how this trade actually worked out. Once we got into these levels, I actually saw some selling pressure and decided to exit the trade for a 3.5 to 1 risk reward on this specific trade here on the Aussie Canada. The market did go higher, but you can never catch absolutely everything out of any trades. So here, main takeaways. Make sure you have objective rules like we just discussed for reversal and price action patterns. Make sure that you're not trading these patterns in the middle of nowhere. Make sure you have set in stone rules for levels of structure that are important, areas of value the market is likely to reverse in before you even decide to possibly place a trade based on any pattern, especially price action patterns like this. And once you have all of those things combined into a strategy, it's time to test it, see if you want to make it a part of your trading plan. If you made it all the way through the video, I want to thank you. And if you're ready for some more advanced training, I'd like to invite you to join us in the EAP Training Program and let you know that you're not alone. I work with thousands of traders every single day that struggle. I was one of them. I struggled like crazy in the beginning of my trading career. Over a year passed while I was just consistently losing money and had no idea what I was doing. But over the process of a year or two in the beginning of my trading career, I learned how to actually create consistency in my trading and how to become a professional trader throughout the process of testing thousands and thousands of trades, throughout the process of learning the importance of discipline, the importance of risk management, and learning how to have the proper expectations. And in doing so, I left a trail of breadcrumbs. I created a map that I now use to teach other traders how to do the same exact thing. And that map is inside of the EAP Training Program. I can't put that entire map on YouTube because the course is hours and hours long. No one would watch the entire video, right? But if you get involved in a program where you have a mentor, someone you can ask questions to, it becomes a lot easier. So inside the EAP Training Program, I'll put some testimonials up on the screen of traders who have already been through the program and found it valuable. But inside of that program, what you're going to receive is a full training course that teaches you the strategies I'm using on a day-to-day basis, that will teach you the importance of discipline and risk management and how to implement them into your trading. You'll also be receiving 3 to 5 email analysis per week. The trade you see on the Aussie Canada that's on the screen right now, I'll put a screenshot up. I sent this trade out in email analysis in order for other traders to either be able to capitalize on it if it's something in their trading plan or learn from it in terms of learning how I'm seeing the market and using the strategies that are inside of the EAP Training Program. And on top of all of that, you'll be receiving what I call priority email and be able to ask me any questions you have about the strategies in the course, Forex in general, or the course in general. And finally, as the topping on the cake, the program comes with a 60-day money-back guarantee. So if you have went through the course and applied what you've learned in order to try to create a consistently profitable trading plan before ever trading live, which is so important, and you find that it did not help you in the way you thought it would, just ask for your money back and we will gladly send you your money back within 60 days. So if that's something you are interested in, feel free to click the link in the description that says EAP Training Program. If not, that is totally fine too, but keep it locked here on YouTube by clicking the subscribe button so that you're always notified about the valuable free content we come out with here. Follow us over on Instagram for early release content. Click that like button if you enjoyed the video to help out with the YouTube algorithm. Comment below with anything you'd like to see next, and we'll put that into one of our next videos. I look forward to seeing you next time. Hope you have a great trading week, and I will talk to you very soon.